everyone, and welcome to Pearls of Fisdom with Nirmal Bang. I'm Avandabash. All eyes are on the union budget by the Finance Minister Nirmala Sitharaman. That's going to be on the 1st of February. The general expectation is that we're ruling out any sort of a pre or post budget rally. It's going to be a continuation of a lot of reforms. So let's understand what to expect. Punita Kumar Sinha is a founding partner at Pacific Paradigm Advisors and now joins in. Thank you so much, Punita, for taking time out. Let's get in a sense as to what the major expectation is from the budget. Is it going to be growth oriented? What kind of policies are we expecting? Is there going to be a lot of focus on fiscal discipline and sectoral incentives that could maybe lead to a recovery in the markets that have been down and out of late? What are you expecting?
So it's not that what I'm expecting. I think it's what I'm going to focus on, what I think they may do based on what we're seeing in the economy. So we definitely have seen some kind of a slowdown, particularly in the rural segment. And I think there is some stimulus that is required there. There seems to be stress based on the data I'm seeing from the financial companies who are lending. They are finding slowdown there. So I think there could be some stimulus that could spur growth. So you're right, it is going to be some growth oriented because growth otherwise has slowed down. So that's one area I think there could be emphasis. Second, I think what is required is, given what is happening in the US, given what China is doing to offset potential tariffs and the trade wars, I think each country is trying to boost its own domestic economies and domestic entrepreneurship, like what we've just seen, what has happened on the AI side from China. So I think Indian companies also need to come up with their own alternatives and low-cost alternatives that could be working well for India. And so there may be some requirement to increase the R&D tax benefits so that Indian companies can spend more on R&D. I think that's what's required, and I hope that the budget can put some emphasis on R&D tax credits so that innovation is further supported. The third area I think that is required is to boost our own consumption and the domestic economy, as I said, overall. And that, if you see the rich people, they're spending there in, whether it's in autos or in homes, real estate. All the high-end models are selling, high-end real estate is selling, but it's the medium and low end that is sort of struggling. So I think, of course, the rich have made a lot of money on the stock market, so they don't need any more support, in my view. I think the support is really needed for the middle class, and there should be some benefits given to the middle class, whether it's on tax incentives or some other categories of saving that they could benefit from that. But that is also required. I don't think there needs to be anything more given to the rich.
Okay, fair enough. But, do you think that this time around we could see the focus on, the fiscal deficit sticking to 4.5% as a target this time around?
So I think the fiscal deficit has to be obviously managed carefully. If you look, whether it's the US, a lot of countries, I think the fiscal discipline has kind of got a little bit weakened. I think that discipline needs to be maintained. And I think whether they, if they give more thrust in certain areas for spending, then they'll have to raise resources somewhere else to offset that. Now that could, I don't know whether, I don't think they can increase income taxes anymore, because income taxes are pretty high in India already. And so that is not an option in my view. In fact, corporate tax rates are much lower than income tax rates. So I don't think the income tax side can be, should be worked on. Maybe corporate taxes could be, I don't know if they do that. Nobody ever talks about raising taxes. So then maybe they'll bet on privatization But then the equity markets, as you know, have been kind of weak right now, and they, um, domestic, I believe, SIP flows have for the first time, slowed down significantly, even turned negative in some cases. So they'd have to time that appropriately to be able to meet those targets for divestment. So I don't know where they will get the resources from, but they'll have to find a way to get resources to maintain the fiscal deficit so that they can give the thrust in the areas that require it.
Right, and what's the expectation in terms of the capex plan? The expectation is that it could be a little over 11 lakh crore. They've undershot that in the financial year 2025. So, what's the expectation?
I think capex, of course, for this stage of growth that we are in the economy, the capex has to continue. So there has to be emphasis, and it is on that point. I'd also like to mention that it's not just capex from the government, but they could also give some incentives like increased PLI schemes, so that Indian manufacturing gets another boost. Because of what is happening in the US, I think it's very important that India's Made in India is really pushed further, because we don't want to be dependent on our companies to export, because there could be tariffs put on them. So we want to, and there is enough demand in India. So we want the manufacturing sector to get maybe potentially more PLI schemes. And so I think there should be both government capex as well as private sector capex that has to be encouraged.
Do you think Made in India and Make in India will be a big focal point?
I think it should be, given what I mentioned, that the tariff regime in the US, it may not be as friendly to foreign companies, and so our exporters could potentially, have their market a little bit shrunk or their costs going up. So I think it's important that we enhance our own domestic production, and I think Made in India is an important theme, to the extent that we can also focus on innovation, quality. At the moment, I think innovation and quality are not where they should be. So those have to be encouraged. And the tax schemes, of course, tax incentives.
What about innovative measures to really boost the infrastructure sector, the agricultural sector, MSMEs, and other critical sectors? Do you think that that is the need of the hour?
So I think agriculture is a sector that has been very unpredictable in terms of its output, because it's very dependent still on monsoons, and there also crops can get destroyed, and climate change isn't helping the agri sector. So I think there's a lot that needs to be done, and then of course the efficiency by which the farmers can sell in the marketplace. So all of those need to be worked on. I don't have specifics because I'm not an agri expert, but I do know that, having served on an agri chemical board for a long time, I know that how difficult it is for farmers to predict their output, given what's happening in climate change and unreliable monsoons and different, changing weather patterns, insects, unpredictable insects coming because of climate change, etc. And the farmers still need to be, brought much more to the marketplace. So all of that needs to be worked on. And I don't know if that's a combination of public-private or just government.
Sure, and given the fact that we have seen an increased commitment from the government of late towards, healthcare initiatives for largely an inclusive healthcare budget, do you think that that will continue?
I mean, healthcare, of course, I think we are very short on our, while we have many good doctors, I think we don't have enough capacity, first of all, on training doctors. I think it's still very hard for people who want to become doctors to become doctors. Plus, our nursing staff also, we don't have enough, and those, many of them go overseas. So, and I think our hospital capacity is also short, given the population. And while we've done a lot on the free medical care for people below certain income, I think the insurance sector also can play a more important role. But we are also seeing a lot of private sector. It's not so much a government thrust, but we're seeing private sector really spending and building hospitals, new hospitals, private equity firms also supporting healthcare companies, investing in healthcare companies. So I think maybe some incentive to promoting and setting up more educational resources, more hospitals in rural areas, or things like that are required. But I don't know if it's a priority right now, frankly, given how many other things the government needs to do.
Absolutely. And the new tax regime, do you think that we could see some tinkering on that front?
I don't know. I have not actually thought about it. I've just told you what I think is required. Whether the government will do it or not, I don't know. Because, for instance, could they potentially rationalize long term capital gains and short term equity capital gains to global levels, which are much higher than what they're in India, given how well the markets have done, and that segment of the population can easily afford to pay the higher taxes given how much they've made. I think that could be an area they could collect some more resources from. So I wouldn't be terribly upset if they did that. But will they do that? I don't know. Again, will they cut any income tax rates for the middle class? If they do, that would be good. But I don't know if they would. Will they increase the tax slabs? Perhaps they could increase the 7 lakhs to 10 lakhs for the low end of the population. That is probably a possibility. Could they increase corporate tax rates given that they're low? But I don't think they would do that because it could really hurt the corporate sector, given where that they also want to project a more growth-oriented budget.
And given the fact that the markets have seen relentless selling, there's been FPI selling, weak earnings support. What's your outlook? Are they very vulnerable, or could we see an optimistic long term outlook?
I mean, right now the markets are pretty weak, and there's a lot of uncertainty. And I had expected volatility, and where valuations were, it's not surprising that markets are correcting. Could the budget turn that trend? Perhaps a little bit, but it may not be long lasting because I think the trend on weaker markets and economies also linked to what's happening globally. So if the global markets like US and other markets go into somewhat of a correction, then I don't think India, despite what the budget might do, will really buck the trend in a meaningful way. Maybe for a short term, it might. So valuations are a lot better now given this correction. So for the long term, I think if one um, looks at the next 3 to 5 years, I think India is definitely, you could get some better valuations and entry points in this year to enter. Whether you need to rush in now, I don't know. But I think you'll get good entry points. The market would remain volatile in my view. The budget could stall any correction short term if it has some good announcements. But then eventually the markets will move with global markets.
Sure. So, Punita, what would you say is the Indian economic landscape currently with all the challenges like weak consumption, persistent inflation, lackluster earnings? How are we stacking up versus the rest of the economies?
I mean, India is still one of the faster growing economies. It is, in absolute terms, we are still growing well, but we've obviously slowed down from where we were coming or where we were. Um, Inflation still is a bit of a concern. As I said, growth needs to be, while the headline numbers don't look so bad, I think there are pockets of the economy that are feeling some stress, and that needs to be addressed. Consumption needs to be boosted. And I think the rupee is to some extent reacting and responding to potentially increased tariffs that might happen in the US so that India remains more competitive. Um, so I think from a India perspective, I mean, India is still one of the better places to be. Of course, US continues to also do well, but there's more uncertainty related to China. There's more uncertainty related to other countries as compared to India. So India is relatively safe because we have our own strong domestic demand that that can be managed by the Indian government by putting some stimulus, and it isn't highly dependent what's happening to the global economy. It's the export segment that is more linked to the global economy. But we have a large economy, and I think we can withstand any global negative trends. But it's very hard to predict what President Trump will do. He's definitely stopped the war in one area. Could he stop the war in another area? Could he start another war by trying to capture Greenland? So it's very unpredictable right now because there's a lot of uncertainty that could affect Indian markets and the Indian economy to some extent.
Okay. Punita, insightful as always, interacting with you. Thank you so very much for joining in. Hope to chat with you more often.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.